Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TOMSON Group Limited Annual Report. TOMSON Group Limited is a diversified conglomerate with various businesses and services across different sectors. At its core, the company engages in property development and investment, encompassing residential, commercial, and industrial properties. This includes developing and managing properties, as well as offering property management services to clients. In addition to property development, TOMSON Group also operates in the hospitality and leisure sector, with a golf club located in Shanghai's Pudong district and a hotel situated in Lujiazui of Pudong. The company's entertainment arm invests in live shows, while its administrative services cater to the group's internal needs. Furthermore, TOMSON Group has ventured into securities trading and media and entertainment investment and operation businesses. This includes film distribution and trademark holding activities, showcasing the company's diverse portfolio across various industries. With a presence in Hong Kong, Macau, and mainland China, TOMSON Group Limited is a significant player in the regional business landscape. TOMSON Group Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. TOMSON Group Limited trades at a lower price-to-earnings ratio of 6 times and a higher price-to-book ratio of 0.4 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than TOMSON Group Limited itself. The company maintains a moderate leverage profile, with liabilities making up 42% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 6.03%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the key factors that have impacted the company's financial performance. On the growth side, property investment and rental income have been significant contributors, with revenue from sale of properties increasing by $2.53 billion and revenue from media and entertainment business rising by 85%. The property development segment has also seen substantial growth, with a notable increase in revenue from $50,170,000 to $5,906,000. In addition, the Chinese mainland segment has experienced significant revenue growth, increasing from $393,245 to $1,934,314. Sale proceeds from the Thomson Foresta project have also been substantial, with a total of $1,597.98 million recognized in 2025. Furthermore, rental income from commercial and industrial properties and leasing of residential units at Thomson Riviera have contributed to revenue growth. On the decline side, revenue from rendering of services from golf club operations has decreased by $9,061, while property management fee revenue remained relatively stable with a decrease of only $1,609. Interest income has also declined, falling from $77,046 to $53,836. Dividend from unlisted equity instrument at FVTOCI has also seen a decline, decreasing from $32,719 to $12,534. These factors have contributed to the overall revenue decline in certain areas of the company's operations. The net income and profit margins of the company underwent significant changes across various industries. In the hospitality and leisure industry, Thomson Shanghai Pudong Golf Club saw a substantial increase in net income, rising from $255,000 to $739,000. This growth was accompanied by an improvement in profit margins, which increased from 10.1% to 21.5%. In contrast, Intercontinental Shanghai Pudong experienced a slight decrease in net income, dropping from $17,919,000 to $16,241,000, despite showing an increase in the following year. However, its profit margins decreased from 13.2% to 12.6%. On the other hand, the securities trading sector witnessed a significant turnaround in fortunes. The company transitioned from a net loss of $9,156,000 to a net income of $23,628,000. This improvement was also reflected in its profit margins, which increased dramatically from -100.3% to 47.2%. These changes suggest that the company's business strategies and market conditions had a positive impact on its securities trading operations, leading to improved financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the data provided on page 3, the company achieved an operating cash flow of $234,119 in 2025. This is a clear indication that the company is generating positive operating cash flow. The confirmation of this trend can be seen on pages 16 and 17, where it is stated that there was a net cash inflow from operating activities and an increase in cash and cash equivalents. This suggests that the company's operations are not only profitable, but also capable of generating sufficient cash to meet its financial obligations and invest in growth opportunities. Overall, this trend is a positive sign for the company's future prospects. The company's financial performance can be analyzed through its various segments. In terms of profitability, the property investment and trading segment stood out with a profit of $1,685,942. This was closely followed by securities trading, which generated a profit of $23,417. The property development segment also performed well, recording a profit of $145,727. On the other hand, some segments struggled to break even or incurred significant losses. The media and entertainment segment reported a loss of just $25, indicating minimal impact on the overall financials. However, the trading segment was not as fortunate, incurring a substantial loss of $9,332. Management is expressing a positive outlook for the company's future performance. They plan to lease out unsold residential units, which will help generate additional revenue. The hospitality industry has shown improvement due to favorable weather conditions, and the company aims to capitalize on this trend by enhancing services and expanding clientele at the Intercontinental Shanghai Pudong Hotel. To achieve these goals, management intends to increase marketing efforts for guest rooms and food and beverage operations at the hotel. This strategic move is expected to drive business growth and improve profitability. Additionally, the company will continue to invest in various live performances, which will not only enhance the overall customer experience, but also provide a unique selling proposition. Management remains committed to the property sector as the core focus of their business and investment strategies. They are cautiously optimistic about the luxury residential segment in Shanghai, indicating that they expect this market to remain stable and potentially grow in the future. Overall, management strategy is centered around leveraging existing strengths, improving services, and expanding marketing efforts to drive business growth and profitability. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases of other businesses or assets, nor have they sold off any major divisions or subsidiaries. This lack of movement suggests a stable and focused approach to business operations, with the company choosing to maintain its current scope and direction. The company's financial strategy has been focused on returning value to its shareholders. One notable approach is the implementation of a scrip dividend scheme, which allows the company to buy back shares from existing investors. This move demonstrates the company's commitment to maximizing shareholder returns and optimizing its capital structure. By repurchasing shares, the company aims to increase earnings per share and enhance overall investor value. That concludes the financial summary for Thomson Group Limited. Feel free to comment below, and I will be happy to answer them when possible.